Welcome to This Explainer. Okay, so today we're diving into something really fascinating, the hidden escalating tier system of modern banking. We usually think of a bank as this big monolithic building with just one set of rules for everybody who walks through the doors. But actually, the reality is that a bank operates like multiple, completely distinct institutions all living under the exact same roof. Let's get right into it.
So, here's a question for you. Are you a customer or are you a cost? It sounds super simple, right? But this is literally the fundamental dividing line in banking. As you'll see, the entire banking system completely morphs depending on the balance in your account. The level of service you receive, the fees you're charged, and honestly, even the basic human respect you're afforded. It all changes dramatically as you climb the financial ladder. It's really a tale of two systems. On one side, you have this algorithmic indifference, a cold, automated, highly strict penalty system that targets people with little to no capital. But then, on the exact opposite side, you have human discretion. This is the highly personalized, incredibly flexible leverage granted to the wealthy. Same bank, same logo on the building, but an entirely different universe inside. So let's start at the very bottom. Section 1. Levels 1 and 2. The cost of being poor. Picture this. You're standing at a gas station. You swipe your debit card and declined. Everyone behind you is watching, and you're frantically trying to calculate in your head if yesterday's transfer actually cleared. This right here is the incredibly stressful reality of level 1 banking. Let's say your account goes negative by just $4. Well, to the bank's automated system, the actual severity of that drop doesn't matter at all. It simply triggers an automatic overdraft fee, usually around $35. So precisely because you don't have money, the bank comes in and takes away even more of it.
Now, the absolutely crucial point here is how fast this snowballs. First, your account drops into the negative. Second, multiple small, totally forgotten transactions process, maybe a $5 coffee or a random streaming subscription. Third, those $35 fees instantly compound for every single transaction. The math here is almost elegant in how flawlessly it punishes the wrong person. Just because you lacked funds, 3 tiny charges just cost you well over $100 in automated cascading penalties. And when you look at this on a macro scale, the numbers are just wild. Banks recently collected over $7 billion, yeah, billion with a B, in overdraft fees in a single year. To put that staggering figure into perspective, the vast majority of that revenue comes from a tiny slice of accounts that are just chronically overdrawn. It is quite literally people paying repeatedly for the privilege of being poor. Now, if you manage to scrape by and climb to level 2, you might have a few $100s to your name. But guess what? You still aren't profitable enough. If you try to get a credit card at this level, you'll probably be offered what's called a secured card. This means you actually have to deposit your own hard-earned money as collateral, just so the bank can lend your own money back to you and charge you interest on it. Your deposits earn 0.01%, which is basically zero, while the bank turns right around and lends that same money out at anywhere up to 24%. It's just polite, automated indifference. Which brings us to our first major identity shift. At level 1, the bank looks at you and simply sees a cost, a negative balance that needs to be recovered. At level 2, you become a small number. The bank's interest in you is purely algorithmic at this stage. You're definitely not a valued customer yet. You're really just a transaction in the system. Moving on to Section 2, Levels 3 and 4, earning the title of customer. As we keep climbing the ladder, having a stable income triggers a massive shift in how you're treated. Let's say you get a steady job and a consistent $3,200 direct deposit hits your account every 2 weeks without fail. The algorithm absolutely notices this. Suddenly, those annoying monthly maintenance fees, waived. You start getting shiny mailers for real credit cards, you apply for a $5,000 personal loan, and shocker, it actually gets approved. Because of your income pattern, you've finally become a viable revenue source. And this feeds directly into level 4, which is the wealth loop. Let's say you've managed to build up $18,000 in savings, and you always pay your credit cards on time. You've basically proven to the bank that you're low risk, so they start extending you more rope. Go to buy a car, and suddenly your auto loan rate drops from 11% down to 6.8%. Because of those lower rates, you get to keep more of your own capital, and that retained capital compounds even faster. Very quietly, the math of the whole system begins to tip right into your favor. So look at how our identity has completely evolved here. By level 3, you are finally recognized as a customer that they actually want to keep around. By level 4, you're viewed as valuable. Now, it's not quite a totally intimate relationship yet, but if you threaten to close your account and leave, they would actually put up a fight to retain you. You are officially experiencing the very beginnings of leverage. All right, Section 3, Levels 5 and 6, the shift to leverage.
At this point, the whole vibe changes completely as we step into the incredibly smooth world of actual wealth management. Welcome to level 5. With around $150,000 or more in assets, the real perks of leverage start to show up. Priority hold queues mean your wait times just vanish. Poof, gone. You might even get a dedicated banker. Annoying fraud alerts, they're resolved instantly by senior staff who actually have the authority to just fix the problem without having to read from a script. The bank is now actively fighting and competing for your business. Then, as your net worth crosses that $500,000 to $1 million mark into level 6, the bank's internal language changes yet again. At level 5, you are protected. But at level 6, you are officially classified as an asset. You see, you aren't just buying off-the-shelf consumer products anymore. Instead, you're being carefully consulted, so the bank can bring your entire financial life under their umbrella.
Let's get into Section 4, Levels 7 and 8, the Hidden Bespoke System.
Okay, so now we are stepping straight behind the velvet rope. This is where the everyday friction of the outside world completely disappears. Think back for a second to level 2, dialing some 800 number and just praying the automated system understands what you're saying. Now contrast that with level 8. We're talking direct cell phone access to a human being whose literal sole job is to say yes to you. Private banking for the ultra-wealthy is, no joke, a completely different institution operating totally invisibly inside the exact same building. At level 7, which is over $5 million in assets, and level 8, the absolute ultra-wealthy tier, you unlock true elite access. You are offered completely unadvertised products. You get massive mortgage discounts. And standard investment minimums, yeah, those are just waived. Your private banker manages fewer than 20 clients total, and they know all about your personal foundation's goals. If you have a complex deal, it doesn't sit in a queue for 2 weeks. It gets pushed through internally, bespoke, in 48 hours. There is a brilliant line from our source material that just perfectly captures this dynamic. It says, "Banks do not break laws for wealthy clients. They exercise every legal degree of discretion." That rigid friction and that cold, automated indifference that punishes the poor, it simply does not apply up here. Internal policies have discretion built right into them, and that discretion is consistently, repeatedly exercised in favor of the wealthy.
At the absolute top of the ladder, your identity makes its final, massive leap. At level 7, the bank views you as someone deserving of special treatment. But at level 8, you are a relationship. And that relationship is literally a named line item on a banker's performance review. If you took your account elsewhere, it would legitimately threaten that banker's entire career. So you possess a completely different kind of power.
So, what does this all mean? If the banking system charges you for being poor, using strict automated fees to extract billions of dollars from negative balances, and simultaneously pays you for being rich, bending literally every rule to offer you leverage and better rates, whose money is really running the bank? It's a fascinating compounding reality of the financial system we all live in. Thank you so much for joining me for this explainer. Keep learning, and I'll catch you next time.